Welcome to Research Business Daily Report. We've been named one of the top podcasts in marketing research, and we are the industry's only daily research news video. We're made possible by RBDR's exclusive community at the crowdfunding platform patreon.com/RBDR. I'm Bob Lederer, for 25 years the respected voice in market research. Very early in my 44-year career, it was a snap to arrange to speak with almost any Wall Street analyst, and it was an enjoyable time sharing ideas with them about the companies that they and I were covering and very interested in. In the 1970s and 80s, many wanted the professional and personal publicity that came from working with me. But that's no longer the case. When we attempted to dig into Analyst's future expectations for Kantar Research under its new ownership, Bain Capital, we were almost universally turned down flat. Thankfully, one organization agreed to share its Kantar projections, Yuba Research Partners, LLC, and its managing director, Douglas Arthur. Doug favorably compared the structure of the WPP Bain Capital agreement with an acquisition last year that involved Thomson Reuters and Blackstone. In that deal, Thomson Reuters sold 55% of its financial and risk segment to Blackstone for $17 billion. Doug stated that 1 year after the deal closed, Thomson Reuters stock is now up 45% from its earlier point, while Blackstone has cut costs, raised margins, and begun monetizing assets. Whether something similar can transpire on the Kantar deal remains to be seen, observed Doug Arthur, and he explained it's not immediately clear how Bain is going to leverage Kantar within its portfolio. Doug Arthur's early projections for Kantar are based by Yuba Research on a quote-unquote clean carve-out of WPP's existing data investment management business. That was what Kantar's technical designation was inside WPP. Any Bain-operated Kantar projections now rely on existing projections for Kantar in 2019, even into part of 2020. But then Doug Arthur sees a 1% total revenue growth curve through 2023, followed by a slight uptick after that. Here are the projected Kantar annual revenues expressed in millions of pounds silver. As you can see, there isn't much growth, especially since we mentioned the 1% per annum growth that was expected. The most important variable in those numbers and how much they change will probably be the extra spending that Bain makes in support of Kantar. As reported on RBDR last week, Kantar CEO Eric Salama and two Bain Capital managing directors both spoke at the time of the deal's announcement about planned significant investments in Kantar. All would far exceed what WPP was capable of injecting moving forward. Notably, there was pronounced talk about potential acquisitions, and that has been substantially limited under WPP's ownership. And that matters because of expected Kantar cash flow and its impact on reducing the company's debt. Sufficient cash flow, theorizes Doug Arthur, should slowly lower Kantar's existing 2.4 billion pounds silver in debt to under 2 billion by the end of 2025. However, Arthur cautions that private equity firms always make it difficult to determine how much cash yield a particular firm will pocket, as opposed to using it to pay down debt or to make investments in the business. Doug Arthur gives us a solid lay of the land at Kantar as it exists today, but of course, we are really early in the Bain Capital Kantar Research relationship. In fact, the deal hasn't even closed, and it probably won't until sometime next year. So many decisions and maneuvers will take place before Bain Capital officially takes 60% control of Kantar, which will certainly lead to ongoing projection adjustments from what we've shown here today. So stay tuned. Again, our appreciation and thanks to Doug Arthur for working with us. That's Your Research Business Daily Report has been made possible by our crowdfunding platform at patreon.com/RBDR. This video series is produced thanks to the interest and the support of regular viewers. And we work diligently every day to make it worth the investment that's been made by Patreon supporters, both for quality and for the continuation of this series. We want you to know about the lengthy hours we spend to produce each version of RBDR. It begins with a daily internet search for high-impact information, knowledge, and opinions that we think are worthy of being considered for the RBDR audience. Then we spend about 30 minutes to decide which of the actual discovered bits of information make the cut. Then 2 hours for script creation, rewriting, and fine-tuning, followed by 30 minutes to tape each report, and 2 hours for our production team to produce the final product. And by the way, when you see guest commentators, the time we spend preparing and readying them is also not worked into that time equation that I just spelled out for you. So we hope that you agree that the 5 minutes or so that you spend with RBDR on a regular basis is time well spent. Although the internet is pursued and perceived by everyone as a free zone, we believe that $5, $10, or whatever level of patronage that is comfortable for you as a monthly contribution to RBDR is really not much to ask for. So please visit patreon.com/RBDR and show your support. And at the same time, if you'd like, please share your thoughts about subject matter for us to discuss or guests that you would like to hear from. We hope you have a great research day and that the rest of your research week is a profitable one. Let's all hope for a comfortable weekend after last week's incredible heat wave, and we'll look forward to seeing you back with us on Monday.